A wise man said this. He said, I used to be embarrassed because I was just a comic book writer while other people were building bridges or going on to medical careers. And then I began to realize entertainment is one of the most important things in people's lives. Without it, they might go off the deep end. I feel that if you're able to entertain people, you're doing a great thing. Stan Lee. Live from the 3-room apartment above Uncle Jack's garage while the basement's being renovated. Hey there, stackers. I'm Joe Saul-Sehy, Average Joe Money on Twitter. Welcome to Money in the Morning. This is the show where we take not one, but two headlines ripped from the financial press, and we not only read them like some shows do, we go a step further. We actually tell you what they mean to your wallet. We've got two timely stories tonight. Today, this morning. On the show. Guess what time we're recording? At night. By the way, we do this show live in front of a Facebook audience. If you'd like to join us and hear me make gaffes like that one, facebook.com/iStackBenjamins. Today's episode brought to you by Hurdler. You know, if you're somebody who's decided, I need more income. We talked about sometimes there's income problems. Well, if you have an income problem and you're starting your side hustle, check out Hurdler. Or if you're an entrepreneur, check out Hurdler. Hurdler automatically tracks all your mileage, expenses, income streams, and tax deductions in real time. On average, people find over $5,600 in tax deductions. Guess what? If you use our link, you can check out the premium product for free. stackingbenjamins.com/Hurdler. That's HURDLR. All right, enough about Hurdler. We're going to talk two things tonight. We're going to talk tonight again. I said that this morning, going back to when we're recording, we're going to talk two things. We're going to talk about a stock market that went down 600 points, over 600 points. And we're going to talk about Mr. Stan Lee. So Laura, you want to kick this thing off?
Just when you thought the show couldn't possibly get better, it's time for your headlines.
Yeah, Laura, it doesn't get any better than me mixing up what time of day it is as people listen to this. Money in the morning at night. Yes, a rare nighttime edition of a Money in the Morning recording session. The first piece comes to us from Market Watch, written by Sue Chang and Chris Matthews. Stocks close sharply lower as Dow tumbles 600 points in the wake of oil market woes. How about that? Dow Jones down 600 points in a single day. It's a big move. Stocks closed sharply lower Monday with the Dow Jones Industrial Average tumbling 600 points as crude oil prices extended their retreat, while a firmer U.S. dollar also sparked worries about the competitiveness of U.S. corporations in an increasingly challenging economic environment. Trading, however, relatively active, is gauged by the number of shares changing hands despite Veterans Day. The only major market to close in commemoration was the bond market. How'd the benchmarks fare? The Dow Jones Industrial Average dropped 602.12 or 2.3% in a single day. The S&P 500 fell 54.79 points or 2%. While the NASDAQ composite declined 206.03 points or 2.8%. Now, for most people, by the way, if you have stocks, most people are going to, and by most, I mean, when I was a financial planner looking at most people's portfolios, a diversified portfolio is going to trade closer to what the S&P 500 does than the NASDAQ or the Dow. If you trade your account actively or you follow it very actively, you may skew closer to the NASDAQ. If you're more of a risk taker, Dow Jones Industrial Average generally, people's portfolio doesn't follow that as closely. So of those three, your portfolio, if you're in stocks, probably closer to 2% down. But obviously that's going to depend on exactly what you're in. Preliminary trading volume hit 6.7 billion shares, slightly off from the year-to-date average of 6.9 billion shares. So a little slow day, but not much. What drove the market? The piece asks. Representatives from Saudi Arabia over the weekend said the kingdom would cut its oil production, while the Organization of the Petroleum Exporting Countries weighs a more sweeping reduction of output by members of the oil cartel. West Texas Intermediate crude for December deliveries fallen for 11 sessions in a row, finishing Monday below $60 a barrel for the first time since February. A shock drop in oil prices has raised questions among investors about the health of the global market, and investors will closely watch talks of cuts to crude production that could stabilize moves in the commodity, which entered a bear market defined as a drop of at least 20% from a recent peak last week. Worries about oil's effects on the market come as investors continue to fret about China and U.S. trade tensions, with President Donald Trump set to meet with Chinese President later in November at the sidelines of the G20 summit to discuss resolving their trade disagreements. A rising dollar also weighing in on markets, as a rise in the greenback can hurt sales of multinational companies, making goods relatively more expensive to customers purchasing abroad. What were strategists saying? Michael Schoonover, portfolio manager at Catalyst Funds, told MarketWatch that recent market decline suggests the partial deflation of a, quote, passive investing bubble in which stock prices have been driven irrationally higher by a growing share of money invested in passive index funds and exchange-traded funds. We've seen generally low volume of late, which suggests that institutional money isn't driving the market, he said. Because many passive funds are weighted by market cap, massive companies like Apple and Amazon have been responsible for much of the market's gains in 2018, creating a self-reinforcing cycle that leads to higher and higher valuations for the companies dominating the S&P 500, according to Schoonover. Now we are seeing the inevitable repricing of stocks that were artificially boosted by flows into passive low-fee products, he said. Craig Callahan, president and founder of Icon Advisors, says oil's bear market is weighed heavily on the market in general, and energy exploration firms in particular are creating buying opportunities for value investors. Quote, I'm considering adding to my holdings in the energy sector, Callahan told MarketWatch. These firms have hedged the price of oil, and projections for 2019 earnings per share growth are 25% for the sector, compared with just 9% for the S&P 500, Callahan said. Interesting. Two different analysts, two different strategists, both of them with completely different views. One saying that passive investors are to blame. Maybe, partially. When you have lower trading volume and you have the stocks of the two biggest weights in the S&P 500 going up the most, okay, I buy that a little bit. I don't know what would change on a day like today, as an example. Why that would come to fruition. Also, the idea that oil, which has not been fantastic for a long period of time, now that oil is causing the market to go down 600 points today, especially as Saudi Arabia says that they're going to cut production, which means that'll boost prices. Don't understand why that would matter today. I think there's a bigger point here, though, guys. I think the big point is it's kind of irrelevant, isn't it? It's like Monday morning quarterback. Why did that happen? And certainly, maybe we can grok something about what to do with our portfolio in the future. But really, I think if you start with your goal and you look at what stocks do in general over long periods of time and asset allocate, you don't need to pay attention to any of that. Zero of it. And if you need money right now and the market's down 600 points, why was your money in the stock market? You shouldn't have any money in the stock market that you need for the next 5 years. You should make sure that money is in a separate spot. Or if you're just taking dividends, that's fine. But the second you have to sell, if there's anything that you need to sell that's in the market that's less than 5 years away, you're betting. And on a day like Monday, you got hurt by that bet. Tough stuff. Let's say hello to our friends hanging out with us on Facebook today. We've got Kurt here. Kimberly's here. She's waiting for the Wheel of Fortune, the more important show. And then she's going to watch our show second. So actually, she's watching our show until Wheel of Fortune starts. Let me get that correct. Very important, by the way, that she changes over to the Wheel of Fortune. at that time. Victor's here. Hey, Victor. Victor commenting on the lovely tree behind us. We get a little bit of the holiday here in the 3-room apartment. That's it. You're seeing the sole decoration for the entire holiday season, our Christmas tree, right behind me. It's our only decoration. Very, very small place we're living. Andy says he's moving everything to Sears gift cards first thing tomorrow morning. What could possibly go wrong? Richard is here. Richard said, why is the media loves negative news as opposed to positive news? Like, this is a great time to buy great companies at low prices. Nice job, Richard. The issue is, though, I don't know that it necessarily is a great time to buy. Well, and don't get me wrong. I don't know if it's a good time. I don't know if it's a bad time. But certainly, to your point, it's better than it was Friday because you got it for 600 points less. You got the Dow Jones for 600 points less. Tim says, why does the Dow get the headline when the S&P 500 is a better indicator? I have no idea, Tim. I have always wondered that. Like, why do we pay so much attention to these 30 companies that make up the Dow Jones versus what most people are invested in? I spent so much of my career when I was a financial planner, I spent so much time telling people that what happened in the Dow wasn't what happened in their portfolio. Very frustrating that we don't spend more time with the S&P 500. And Andy says neither really represent the whole market. Dow has too few stocks and S&P is affected by too few of the stocks in it, which is also true. But if you're an indexer, going back to the piece, the S&P 500 is going to go, a lot of where the S&P 500 is going to go depends on Apple and Amazon. Number one, number two, nothing else going on. Eric says, what would happen to the markets if everyone became a passive investor? Actually, this has been a common question, Eric, lately. And if we get that much groupthink, you end up with much bigger opportunity being someplace else. And we're already starting to see that in the active positions. I think historically, active management has been just absolutely horrible. And if you're investing in actively managed funds, I think you can hear the death rattle of those. But I think there's a new way that active management is happening through machine learning, algorithms. You're looking at things like, we've had Jamie Wise on many times from the Buzz Index. You're looking at some of these algorithmic approaches that are incredibly interesting and become even more interesting the more people go passive, because of the fact that it's like what Sir John Templeton said, the guy that created Templeton Mutual Funds, said, if everybody goes right, that means I automatically look left. So I find that kind of new active investing compelling. Ron's here. Hey, Ron. Jonathan said, my poor Acorns account lost lots of money over the past month. Yeah, it's better not to look at it over the short term unless you're looking at it the way that Richard is. If you're looking at this as, hey, I get to buy more in my Acorns account cheaper, think about that. Yeah, the value's less, but that means you're getting shares on sale. And if, Jonathan, you're focusing on buying stuff for the long term, you're going to be okay. Eric says, to your point, Joe, it's important to begin with the end in mind, work backward from your goal, read The Art of War, go for a run, travel to Bavaria. Eric you should have said spoiler alert there, Eric. Eric gives away the entire show in just a couple sentences. Let's move on to our second piece, which is going to be short. This comes to us from CNN Entertainment. Stan Lee, Marvel Comics visionary, dies at 95 years old yesterday. If you're listening to the podcast, the audio version of the podcast. This piece written by Ted Leopold, Lisa Respers France, and Brian Lowry. Stan Lee, the colorful Marvel Comics patriarch who helped usher in a new area of superhero storytelling and saw his creations become a giant influence in the movie business, has died. He was 95. Kurt Schneck, an attorney for Lee's daughter, tells CNN the comic giant was taken by ambulance from his Los Angeles home on Monday morning to Cedars-Sinai Medical Center, where he later died. The cause of death is not yet known, according to Schneck. Lee began his career at what was then Timely Comics in 1939. Over the years, he was a writer, editor, and occasional illustrator. But bored with the output, he was preparing to leave the company when history took a sudden turn. For many years, the business had been dominated by DC, then called National Comics, creator of Superman, Batman, Wonder Woman, and the Green Lantern. In the late 50s, DC started reimagining its heroes, kicking off what comics historians call the Silver Age of the business. But those figures were still largely otherworldly and two-dimensional, living in made-up places such as Metropolis and Gotham City. In the early 1960s, Lee was asked to come up with a team of superheroes to compete against DC's Justice League. With the notable help of artists such as Jack Kirby and Steve Ditko, he helped instigate a revolution, though Lee didn't see it that way at the time. Quote, "If my publisher hadn't said, let's do superhero stories, I'd probably still be doing A Kid Called Outlaw, The Two-Gun Kid, or Millie the Model, or whatever I was doing at the time," he told CNN in 2013. Marvel revitalized the comics business with a series of flawed, more human superheroes. Its figures lived in the real world. Few were based in New York City with all its dirt and clamor, and struggled with everyday challenges, whether it was paying the rent or wondering about their purpose in life. First came the Fantastic Four, a superhero team probably most famous for the grumpy rock-skinned Thing. Following that success, Lee and Marvel introduced such characters as Spider-Man, the Hulk, Iron Man, Thor, the X-Men, and Daredevil. These new superheroes, all created in a burst between 1961 and 1964, were hugely popular and allowed Marvel to surpass DC in both sales and fashionableness. Spider-Man, in particular, became the imprint's signature character, a neurotic photographer named Peter Parker, who, after being bitten by a radioactive spider, developed spider-like powers. Parker was forever clashing with newspaper editor J. Jonah Jameson, an angry, cigar-chomping martinet who was no Perry White, wondering about his relationship with Mary Jane Watson and worrying about his fragile Aunt May. Crime fighting was the least of his concerns. Quote, "I never thought that Spider-Man would become the worldwide icon that he is. I just hoped the books would sell and I'd keep my job," Lee said in 2006. Many of the characters were developed for television with varying degrees of success, but it was the emergence of the Marvel Universe in the movies, especially with the X-Men franchise and the Sam Raimi-directed Spider-Man in 2002, that truly made the brand ubiquitous. In 2009, the Walt Disney Company purchased Marvel Entertainment, the licensing arm of the comic book brand, for $4 billion. By that point, Lee had long since become more of a company figurehead rather than a writer and editor in the day-to-day trenches. He became the company's editorial director and publisher in 1972 and eventually immersed himself in spreading the Marvel gospel, often with the exclamation, "Excelsior." He's had bit parts in most of the films featuring the company's characters. He was occasionally criticized for egotistically cheerleading for himself as much as Marvel. Stan the Brand, the authors of Stan Lee and the Rise and Fall of the American comic book, called him pointedly. Wasn't all joy for Lee. Though the success of the movies made the characters worth billions, Lee maintained that he saw little of that wealth. Even so, he saw more than artist Kirby, who many comics historians credit with molding a number of characters. Over the years, the credit for the characters, and therefore the profits, has been the subject of court cases, some involving Kirby or his family. The character's impact, however, is indisputable. Good stuff. And a sad day. This piece, not much really to say. I mean, the big reason I wanted to talk about Stan Lee today, more than anything, was because of the fact that he was doing one thing and this opportunity opened up in front of him that changed his entire life. And he didn't even really see it as an opportunity at the time. And I think often we kind of see life the same way, don't we? We see life through this lens of just going along, and an opportunity happens right in front of me, and it ends up being what largely defines in most of our heads who Stan Lee is. And I think that's going to be, well, I'll make more of that point when we come to the big idea, because I think there's a really big idea here that combines both of these together. So I'll get to that in a second. I'd like to talk about Hurdler, though, for just one second. Hurdler, thanks to Hurdler for sponsoring today's show. The way Hurdler works is it's an app that allows you to know your profit before and after tax. And why is that important? Most people, when they run companies, they don't know how much money it takes to keep the lights on. And if you've read a great book called Profit First, which if you're an entrepreneur at all, I highly recommend that book, you're going to see how important it is to know exactly how much profit you have and to start there. Also knowing your expenses and your taxes. What does it take to keep the lights on? And especially if you're just beginning, if you're starting a side hustle and you're trying to grow it maybe into a full-time job, use that for your financial independence. Knowing exactly where your money is instead of doing it the way most people do it. What most people do is they take a look at their expenses later and things are a mess. The books are a mess. Their business is a mess. And they finally put things together strategically well after they should have. Begin your business right from the very beginning. If you know your profit ahead of time, if you are a realtor, a host, a driver, a courier, any type of freelancer, it's all built in to Hurdler. Also, you can auto-track mileage, maximize your profit, track every expense, claim every deduction, have it sent directly to your CPA or your tax preparer. You can try the premium version for free, stackingbenjamins.com/Hurdler. It's Hurdler without the E, Hurdlr for Hurdler. I think we're going to end it today on this big idea. And it's not a long one. Stan Lee created Spider-Man. You know how old he was? He was 40 years old when he created Spider-Man. Just incredible. Walt Disney was 53 when he dedicated Disneyland. Today we had this short-term bump in the road, 600-point down day. Ignore the short-term bumps in the road. And remember, it's never too late to start making greatness. Let's go make some greatness. We'll see you next time back here at Money in the Morning.
Money in the Morning is created by Joe Saul-Sehy and comes to your ears because of the collective genius of our producer, Richie Rutter-Reese, engineer, Caden Thompson, and a pack of very well-trained ferrets here in the basement. You'll find links to all of our headlines featured on today's show in Joe's Twitter feed at @AverageJoeMoney. I know you already know this too, but Money in the Morning is for entertainment purposes only, and you shouldn't act on anything recommended by a bunch of entertainers in a basement without first consulting with your financial advisor and second, having your head examined. Have a headline you'd like us to discuss? Send them to Joe at stackingbenjamins.com or put them on our Stacking Benjamins Basement closed Facebook group. This show is copyright 2018 Stacking Benjamins LLC, all rights reserved. I'm Joe's mom's neighbor, Doug, and I reserve the right to always say, we'll see you next time back here on Money in